Good afternoon, ladies and gentlemen. If you could give me a quick sound check, please. Hey, Braden. Good evening to you, sir. Hope you're doing well. Nice one. Awesome. Good evening, Matthew. Good to see you, mate. Well, yesterday was a bit of a rough day, wasn't it? Bit choppy. I myself definitely got slapped in the US markets open yesterday afternoon. It was pretty rough going. We had a really good Monday, which almost led me into a false sense of hope, I believe, for yesterday, thinking that we had reached something in the markets and we were going to see a shift in the dynamic. That being said, we did actually get some relatively decent breakouts in the FX space, but the problem is because I was still of the the mindset of keeping things short and concise and not really looking for necessarily the breakouts, because the breakouts the last couple of weeks just haven't been there. We didn't manage to get any because I only assumed that the price would continue ranging. We'll have a look at what I'm talking about in a moment, and we'll have a quick look at these US markets because it wasn't very impressive, to say the least. So the NAS 100 here, we were looking at the long from the rejection of this level. We couldn't take it, so there was literally no entry criteria at all for that one. It was a complete blowout because we had this move down, which was really nice. As you know, we were on the session and we were looking at setting up the US markets. By the end of the session, half of the trade ideas that we'd listed for the markets had already taken place. So it was a really weird period where a lot of decent volatility was coming into the markets at 1:30, 2 o'clock in the afternoon. So yeah, it was a little bit frustrating, but that's fine. Anyway, so the NAS 100's trades, they just didn't play out whatsoever yesterday. Yeah, they just really didn't do anything. Didn't even make it down to this one. We ended up coming up for this rally. I didn't want to go long the NAS 100 past here anyway, as per the session that we did yesterday, because of the fact that there were not the good enough sort of trading margins that I would look for a path of least resistance. The move up here was quite nice. I mean, frankly, we had this really nice move here, which was really decent. But in real time, we were looking at this area, and we were also looking at the one directly before it, right there. So how would you have tackled that? You would have been going for the breakout of this one, possibly. Well, that looks really good, yeah. And we could definitely have looked for a target profit for that one and taken that spread. But when we were trading down here at 2 o'clock in the afternoon, it was a struggle to believe that we were actually going to be coming up, upwards of whatever it was. Got my sticky buttons there. Hang on a minute. There we go. So yeah, it was struggle to believe that the market was going to rally 1.75% before we got to our entry. So yeah, it was a bit of a struggle. So that was the NAS. The US 30 Dow Jones took a couple of losses in this. Simultaneously almost. We had a dip down in one, so that was one short triggered, and we had a dip down in two, and that was another short triggered. Took a 0.5% loss straight away in the US 30 Dow. So we had one spike down, that was at 2:45. We had another spike down, that was at 3:15, and then the market decided to come back up in essentially we had this rally here. So that leg, we would have been in the market for a bloody long time. I mean, we could have taken this as a potential trade. I'm not saying it's not doable, but it's not great. I mean, even looking at this 15-minute time frame, it's not great. A very, very tight little margin in there. Bearing in mind, this is just the break of structure for the short that we were looking at in the first place. And then from this area, we spent from 4:15 until 6:30 doing nothing before the market went for a little breakout of the highs. So very disappointing. Yeah, very disappointing US Open yesterday. It's really, really quite poor performance from it. In terms of the assets that we were looking at to trade yesterday as well, from the fund ideas, UK Brent, never triggered. We've just ranged ever since. Gold, we had a long bias in, but honestly, guys, I can't actually find the thing for this one. I have no idea what happened to it. I know I've posted it in the UTC thing, so luckily for us, I can just go there and have a look quickly. It should be there. Gold, yes. So we had a gold long, and I believe that gold long is still outstanding. Yeah, I think the gold long is still outstanding. So we're coming up to the entry for that gold long basically now. Yeah, I believe we are anyway. I think so. I'm just trying to copy the chart here. Yeah, I think so, because that was that high there, wasn't it? So yeah, I think we're pretty much coming up to that entry in a moment. So that's still outstanding. We've got the Aussie yen, which was taking place down here. So this is what we were looking at. We were looking at a rally rejection run, or we were looking at the run rejection rally of the range, and it didn't do either. We actually got a break close retest, and the yen fell off the edge of a cliff, and the Australian dollar versus the Japanese yen really went for it right the way up to 101.55. I never would have expected that. I really wouldn't have. There was nothing about that that gave me that expectation. I really did think, well, obviously because I provided the trade ideas for it. Yeah, I just didn't see that coming. I didn't think, I didn't think the current market cycle would have had something like that take place. But there we go. We had the Aussie dollar with a whole wealth of different trading opportunities available, and not one of them triggered. Not a single one. So that's completely flat at the moment. And let's be fair, it wasn't even that nice. It didn't really achieve anything. It's just kind of coiled itself around the major liquidity at the top. And then we had the CAD Swiss, which again, a couple of really nice trade ideas here, looking at range continuation trades between price equilibrium points. Not a single thing happened. Not a single trigger point. So that summed up the entire day's trading. So yesterday amounted to a 0.5% loss off of the previous day's 2.17% gain. And that's currently where we are sitting for the week. And also, that was the US Open. Let's not forget that in the morning, I don't know if you guys were here in particular, but in the morning, I had a DAX trade, which triggered and went to stop loss in the space of like a couple of minutes. And that one was, that was another 0.25% loss as well. So in total, a 0.75% minus day. So yeah, it wasn't great. It really, really wasn't great. So just having a quick scan then. Let's just put that back on the DXY. Oh, whoops. I did not mean to do that. Hang on a minute. TVC, thank you. So looking at the VIX, let's head over here. So the VIX at the moment still at 16. So it's just kind of flatlined. We did have a bit of a rise yesterday, but it's just fallen straight the way back down again. And we are not seeing much of anything happening with this at the moment. So as a general, very broad look at market volatility, we're looking very, very depleted of energy right now in our markets. Looking at the rest of it, let's have a look at the stocks, see what's going on with the equities in particular. So equities at the moment are not really performing exceptionally well. We have a lot of break-evens, a lot of red with a couple of outliers. Obviously, we have Nvidia up at 4.89%, but that is an outlier. We have ARM here down at 3.42%, which is an outlier. Doing well regardless, but it's an outlier. We also have APP or app, which is actually, as you can see, Uploven. And that one is up today very, very nicely at 7.78%. So that, again, is a major outlier. But if we look at the broad market, not doing too well at all. Let's go to the Russell, have a look at the smaller cap stocks. So as you can see here, pretty much a break-even / red wall. We will include the outliers in here. As you can see, we have a couple of those tech stocks there, which are doing quite well. But in general, we are looking at a very, very sort of tired market. We're not seeing any significant losses. We're not seeing any major significant gains across the board. But generally speaking, it's just kind of floating at around 1% down or 1% up, excluding those outliers. Looking at the forex market today, I mean, we can see this from the ticker list anyway. It's been, I would say, pretty tired. You can see this very, very clearly from looking at what's the major losses versus the major gains. Most of these, I mean, the biggest mover today is the NZD USD. But if we cut that out and go right, skip out those top instruments and start from the Japanese, yen, or the Schwen, as I like to call it, the yen versus the Swiss, we're not really seeing too much of anything. It's very, very tired out. Very, very tired. If we look at the gainers, it's pretty much the same. We've got the USD yen up here, which is a bit of an outlier. But then immediate fall into the, let's skip out the pound against the yen as well. We immediately fall into the sort of 0.4s, 0.3, 0.2s. And that makes up the majority of our gainers today. So we're really having to, I think in essence, we're really having to kind of pick up the scraps here where we can to keep the money moving. Now, I don't want to come across here like we're having to constantly have trades open and in the basket, because we definitely don't. We don't want to be in that. We don't want to fall trapped to constantly having to be in the market. But we're nowhere near the cutoff date yet either. Your cutoff date is usually at the end of the second week of December for me, and then things will shut right down apart from the odd occasional trading session in the US markets. That will literally be all we do until the either end of the first week of January, but usually it starts around middle of the second week of January. So those weeks, it's not, I wouldn't look at it like necessarily time off, but it's definitely time off from the charts and actively looking to put trades out in all of the various asset classes, falling down to a bit of a skeleton trading, I don't know, parameters, just in the US Open. So it does feel like we're already there, and that's a bit of a problem. So we need to try and find where that money is, where the money's going, because at the moment, I mean, natural gas looks okay, doesn't it? Because at the moment things haven't been very good. So we'll start from what I'm going to do today is I'm actually going to start from the top of the FX space, work my way all the way through, and then get onto the US markets. We might actually take a bit of a breather from the commodities today. And because, I mean, it's been a couple of days now. We haven't even gotten onto a lot of these euro or pound instruments, NZD US dollar ones as well. So I want to get all of those done and on the table if there are any trading opportunities to be had from them. So let's start again. Completely remove all the analysis. All of it's gone. Completely fresh slate. There we go. All right, Aussie CAD then, top of the list. So haven't been a fan of this one for a few days. So this week, not really been liking what I've been seeing. Nothing changes from that bias at the moment. I don't like the Aussie CAD's price action right now. It's way too inconsistent and choppy. So we're going to move on. I'm not going to waste time and go on about all of the reasons why. It's just going to be very broad so we can absolutely fly through all of these instruments. So Aussie yen did end up being really, really nice and had a wonderful rally, but I don't think it's now going to continue after the fact. So we've had the rally. Now it's really time for the market to take a rest. We have the ceiling of price action about there. And what we have at the moment is potential evidence of the break, close, and retest of the point of liquidity taking place. Now we also have a floor in price action, which isn't absolutely easy to provide because of the fact we've got this area in here as well. But we do have these two lows, which looks really nice when we think about the consistency of the equilibrium that we had between these areas, these 3 points. So I'm probably just going to kind of bring that level up, have that there, and just, you know, try and I will be taking this into consideration. Let's say, for example, if I want to take a short, I'm probably going to be targeting the top of that move. Right? So that's what I'm going to be targeting. Yeah, and we'll leave it there. Yeah, because that's a pretty decent breaker structure point, isn't it, for a long? So Aussie yen, correction mode. Breaker structure for this trade idea is going to be in there, which makes perfect sense. And then I'm going to be looking for the breakout entry point there. Target profit on top of the bullish breaker structure. And whoops. And then we're going to have the stop loss at the 50% point between these two zones, which is approximately 101.12. Okay, so that's going to be the Aussie yen short, which I think looks really, really quite nice and definitely based off previous price action. Now, that's the counter trend move. If we want to trade the bullish move from here, we haven't got a great deal of options. We've got to contend with this area. Okay, so we cannot be taking a trade idea between these two. Definitely not something I want to be doing. Which means then I'm going to have to take a trade above it. I can't take a trade directly above it because liquidity is trading at around 101.70. And that's a 101, maybe 59 or 101.60 entry point from this structural point here. So you're looking at about a 12 pip margin, which is not enough. So then it would be more likely a breakout of this area in here to then take the long all the way up to 101.95 to 102, which then increases the margin a little bit. You're probably looking at about a 20 pip to 25 pip trading margin there, which is more palatable. So at this stage, that's what I'd be thinking for the Aussie yen. I'm not going to post a long trade idea. I'm only going to have a short in the market at this stage. If it continues going long, then that's absolutely fine. But I'm not going to have a long bias in it at this stage. I'm going to wait for the price action to do what it's going to do over the next day or so. And we'll take it from there. So next up, Aussie NZD. So we were looking at a 15-minute channel yesterday. We have nice upper and lower limits, good median. It's not exactly that robust in comparison to what's going on, obviously, up on the daily time frame. Daily time frame at the moment has been in a stage of price equilibrium for a very, very long time. And frankly, guys, it still is. It still is. Because if we look at the ceiling, okay, that's about where the ceiling is going to be on the Aussie NZD. And we are still trading very much inside the ceiling. We had an attempt, we had another attempt, and it failed twice, and then got the break underneath in the retest of it, and it's continued trading underneath, ever since then. So this 15-minute channel that we've actually built is only across and been established for the last maybe 6 days or so, 6 trading days. We could very well be aiming for something like this for Aussie NZD. And we could, once up there, look at a rejection as a little bit of a miniature swing trade back down to around 109.89. So this is the current trading margin. Now, don't get me wrong, this is not bad. We've had 1, 2, 3, and no completion yet. So we've had 3 successful trades, and we've not had a single failure. So we think about it like that. The odds are pretty good. Probabilities are quite high for this one, but it will take some time to play out. So if we go back down to the 15-minute time frame, I would think, have a relatively decent margin to trade long up to that 110.85 area. But then you are having to completely discount the channel that we're trading in at the moment. But you know what, guys? Why do you think I would be willing to discount it? That 15-minute channel. Yeah, it's a 15-minute channel. It's there. And it's got some structure to it. But why would it be discounted? Yeah. Yeah, right on, man. Yeah, definitely, because price is ranging. Look at where price is coming from, right? Yes, okay, we have had this big rejection from up here. We missed the liquidity low, the floor. And it's continued going, excuse me, up again. But if I want to go short or long, I'm not going to use a channel. I'm going to use where price has been trading from and into. Now, if I use a smaller, more intricate level in there, then we've got a relatively good break close retest going on at the moment from the Aussie NZD. And I would be looking to take the trade above a breaker structure point here and have the target profit back up at the range high at 110.85. So then we have the breakout, we have the target, and of course the stop loss, which is going to be at around 110, let's say 110.65. And that's going to yield a 1 to 2.65 return. Now, there is a lot of short availability for the Aussie NZD, definitely. But we're so close to the top of this mega range that I would much prefer see price come up to refuel at the station here first. The short probably isn't going to be interesting until we see a breakout of around 110.40 because of the amount of areas of interest in liquidity blocks that we have between, for example, 110.55 and 110.45. So I'm going to leave that one alone for the time being. So Aussie NZD is a long breaker structure, pending order trade in there, which is a really nice contrarian view to the Aussie yen that we have. So now we've got a bit of a hedge going on. Okay, Aussie dollar. Not a huge fan. CAD Swiss. Okay. Yeah, I mean, that's the original point I wanted to trade yesterday anyway, so. And look where that ended up. Didn't do a thing for us. I'm going to give that one a miss. CAD Yen. Yeah, that was one hell of a rally, wasn't it? So CAD Yen. There's definitely trading opportunities in here. CAD Yen. Price ceiling. Around 111.50. Breaker structure point. Price is sat directly on top of it. That's in that area in there. If we drag that, look left, we can see lots and lots of highs and lows in the market. Let's just turn that down a little bit. So about there. So that's that. Target profit for this position is pretty straightforward. High, low, low, high, high, low. So if we start from back here, drag the level through, and that's your TP. So then what we're aiming for here, and what we've built the picture of, is 1, 2, 3, 4, 5, and hopefully a 6th. So entry point upon the breaker structure. This is a pending order, 0.25% risk. Target profit down at there. Stop loss around the 50% point. You could have it a bit higher, to be honest. That's yielding a 1 to 2.87. That's probably a bit too high for me. So you guys might want to increase that stop loss. I might be putting the stop loss up at the highs there for a 1 to 2.5 or something. But that's around about what I'll be looking at for that trade idea today for the CAD Yen. Euro Oz. This is all old. That's fine. Okay, so nice inflection point, major inflection point. Down at the lows, we have another point of liquidity for a breaker structure long at 161.86. which means we don't really want to be going short from here, but actually long afterwards. If we form a higher low, then we'll be looking for an entry point at a breaker structure of this area, and that's where the TP will be in there. So that's the TP. This is the breaker structure access point, and that's on the proviso that we actually get that breaker structure before hitting the bottom, which I'm not too adverse to in this particular instance because of what we've formed back here. Not every single asset can be a ranging market state structure, right? Some of them have to be trending, obviously, as you guys know. Most of the markets are allegedly trending. I don't know how good that statistic is or who provided the information to it, but that's what they say. So I believe that a breaker structure point for this would be about there. And then entry, target, and stop loss. Probably, yeah, good margin under there is around there. So let's say a 1 to 2.6. Some very, very nice risk reward ratios. Obviously I'm not even trying here. It's just naturally what's occurring. So yeah, really nice. Now, we also have the fact that the Euro-Oz has broken, closed, and retested this area of liquidity, which means it could trade lower. Now, the lower point to trade to, even though liquidity is the one that I believe it will be going to, the point that I'm actually most interested in here is around there, right, which is a midpoint of a W reversal. So I don't want to take chances with that. Now, if I drag that along to the right, we actually miss the low of the move here. But this margin is just as good as that margin for trading opportunity. But the difference between these two is we've had 1, 2, 3 loss, 4, 5, and 2 losses. So we've had 5 wins and 2 losses. In here, we haven't had anything. Nothing's happened yet in recent history. So it just kind of eliminates the presence of a short being sort of in our capacity there. Now, what we do have the opportunity for is the push, of course, into the money at the cash-rich area down here, then to follow up with a nice big rejection back up to the highs, and then you can definitely look to trade it long. The decent breaker structure, I think that's certainly going to be a TRF, so yeah, I would probably leave that above. Although I have to say that is the base of the inflection point for the move that comes right up to the top there. So I feel like that one's probably more important from an order of priority mindset there. So I would probably end up going with the lower one, actually, just based on what we've seen there. I think that lower one's probably going to be the one that has the weight. So if we get a big push down into liquidity and a rejection, and we then break structure at around 160, 185, we will then be looking for that push north from down below. And that's going to look something like this. I mean, that's a 1 to 3.7 there, folks. It's too big. So let's have it right down at the bottom there. So that's going to be the trade. A 1 to 3.23. It's still insanely big, but it is just simply the way the maths worked out in this one. So we'll have to just go with it. We'll have to go with it, see what happens. So I'm going to have a green there of the Euro-Oz. It's a double long bias. You can certainly look to take shorts from up here as well, but where we're trading at the moment, there's just not the reason to even put the shorts in the chart. And just try and keep it as clean as possible for as long as possible. Okay, so Euro-Yen. We have got a couple of yen instruments already. We got CAD in Australian dollar, don't we? So I don't think we'll do euro. Let's have a look at dollar yen. Yeah, I mean, that doesn't look... Yeah, it doesn't look that good because of where that short is. Yeah, I mean, it could be, actually. we've got short Aussie yen, we're short CAD yen, so we're very pro yen at the moment. So if we sold yen, we'd be going long the dollar. So let's try and find a long here, just as a bit of contrarian view as well. So we're not all strapped down with same bias. So USD yen, really nice point of liquidity in here. Really nice. Formed a nice floor before breaking long. Multiple retests before getting slammed down to 153.90. So that's all looking good. Now if I bring this up here, this then becomes the ranging margins. We have a really nice break close retest, potential continuation to head on there as well. So these are now the trading parameters for the USD yen. So looking at this, I'm going to zone across the tops of the move there. That's going to be that. And then I'm going to be looking at a pending order, 0.25% risk, entry, target, and the stop loss. And that's going to be about there. So we're looking at an approximate 1 to 2.22 for a USD long. Right, let's look at something else. What time is it now? It's a couple of minutes past 2 actually. So time's gone quick. So we'll do another couple of FX instruments and then we'll hop onto the US stocks and we'll get those done for you guys. So let's have a look at the NZD against... No, not against the CAD actually. No, let's do it actually. No, screw it. Yeah, let's do the NZD CAD. Okay, so it's had some god-awful price action recently. It looks genuinely like a murder scene. So that's not very nice. We have a proposed M reversal. You'll be able to see that nice and clear on the daily. The midpoint of the M has been retested, just. We have a nice major inflection point down at the very point of the low there. And we also, just below where the price line currently is trading, have this area in here. And then we've got some trading margin to work with. Now the problem with this is the fact that we have two low points that don't amount to anything. They come out of the blue and they're gone again, just like that. And that's low number 1 and low number 2. Now these generate a pretty high risk profile for me because we had 1 success and 2 success, 1 failure and 2 failure. So this is a 50-50 probability here. Complete coin toss at what's going to happen. Now, generally, 50-50 is the metric we go by. It's what we live our lives by in this game. So I'm not going to turn my nose up at it. I'm going to take it. So breaker structure point for this trade idea is... Yeah. So that is the breaker structure point. But you guys are going to have to be pretty ice cold about this one, I think. This is probably one of those ones where you'll be like, no, I didn't take that. And I'm not blaming you, but I am. It is going to be classified as a proper UTCF position. And that's going to be yielding us a 1 to 1.87. And basically we're just capturing that final little push into the liquidity down at those lows there. Okay, let's have a look at the pound against the Australian dollar. We've got a floor there. We've got a floor. Nah. Don't think I'm too bothered about this one, folks. Although, let's just build this up quickly. So we've got the top of the order block there. We just pull that across. Then we've had these retests on top of it. So that's still used. That's good. And then we have our level down here for the floor, which is then retested on the way down further there as well. So it still has current use. So now we don't even need to look left for these zones. I think the breaker structure for a long here is probably going to be a break close and a retest. So what we're going to do is wait for the BCR. So no pendings allowed, unfortunately, guys. So BCR and then a long. And for the short, I'm not even gonna bother you with a short at the moment. That's the long criteria. Okay, so that's the long criteria. And yeah. And then the short point. No, I'm not going to do anything for the short. That's just going to be that. No shorts allowed in the GA today. Only a GA long. And that's where I'm going to sit. That's where I'm going to sit. We're almost at 2:10 now. So I'll get on and do these US markets for you guys. Okay, so NAS 100 first and foremost. Still not looking that great, unfortunately. Trading margins incredibly tight, a little bit confused. Okay, so that's what we've got to work with currently. So then the breaker structure for the long is going to be on the base of this area here, being broken through. And the one for the short, where's the one for the short going to be? One for the short is probably going to be there. Yeah, that's the margins for the NAS 100. So that's what we're doing with that one. Now remember, if you come down to this area, you have every opportunity to go short from this area in here as your breaker structure. Okay, so you can take the short between there and there as well. I'll post out some panels on this so you guys can see. Okay, so that's the short in the NAS. There's another short upon a rejection of liquidity. And there's also the long from liquidity here as well. Yeah, something like that. Okay, so then the US 30 Dow Jones. US 30 Dow Jones today. Let's have a quick look. See if there's anything going on. Nope, not a single thing. That's fine. US 30 Dow Jones at the moment. I cannot stand the bear margins on this one. There's nothing I like about it whatsoever. And if we do take a look at the long is going to be clearly a breakout of this structural point. And we're trading on top of liquidity at the moment down here. Let's just put a little bit of a floor underneath the Dow at the moment in there. So what I'm going to be looking for here is that breaker structure point for the long. So I'm only going to have a long today in the Dow Jones team, okay? And please do bear that in mind. No shorts. No shorts to the Dow Jones. If I have that there, I mean, that's going to ruin the trading margin, isn't it? I'm not sure that even is. I would say that that looks like the level to go for the breaker structure, but frankly, we haven't used it on a couple of attempts. We have on some others. It's not crystal clear at all. No, I'm gonna do the more conservative thing. I'm gonna have that up further. So that is gonna be it. Yeah, that is gonna be the the level to utilize. And so then from this point on, it's a break above the point for the target profit, and of course the stop loss for a 1 to 2.84. And that, ladies and gentlemen, is where we are at. Okay, so just to recap then, we did take our foot off the gas a bit with our commodities. This gold trade for a fixed 1 to 2 risk reward ratio is still not triggered, but could do this afternoon possibly. We have a short bias in the Aussie yen with the full trade parameters laid out. We have the Aussie NZD, both sides of the market apparently according to this, but in actual fact it's only a long, so I'm just going to relabel that as a green. We have the CAD against the yen, which is looking short at the moment from a rejection of the big daily cash rich area up there. We have the Euro Oz, and this one is long. There's a couple of opportunities in it, but it is long first and foremost. We have the pound against the Australian dollar, which is also looking potentially long. Looking at a BCR of this area before we get invested. We have the NZD CAD. Break a structure trade idea, pending order, 0.25% down at these lows. Just to finish off the institutional run that we've got down at 82.016. We have the USD yen for break a structure trade idea up to 156.11 to finish that one's run as well. And also to hedge off a bit of our yen risk. And then we have our US stock markets, US Tech and US Dow Jones completely laid out. US Tech today has many more opportunities available. It's just about which one works when. All right, team. So I'm going to wrap things up there. Wish you guys a fantastic rest of the day today. Good luck in the US markets. Don't get disheartened, guys. All right, if you get knocked around a bit in the US markets or whatever, don't get disheartened. It is very, 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 very temperamental dynamics at the moment. Markets have definitely been winding down for the winter season, for Christmas. We've seen a bit of a backlash from the US political situation as well. There's still a lot of geopolitics going on at the moment, which are driving factors behind some of the moves that we have and a lot of the moves that we haven't. So there's a lot of things in the mix at the moment that are causing a bit of disruption to our markets. But don't worry, because things will resume. And just like always, it's peaks and it's troughs. So have a good one, guys. Take care, and I'll see you then. Thanks a lot. Bye-bye.